Assalamualaikum warahmatullahi wabarakatuh. We are from Group 5. We present about Islamic Interbank Money Market. So, I will start with definition. Islamic Interbank Money Market was established after 10 years as the first Islamic bank in Malaysia in 1983. After these 10 years, it was able to demonstrate the need for the money market to comply with Sharia. In order to control liquidity, the Islamic banking industry was forced to rely on the Government Investment Certificate (GIC) too after the Islamic Interbank Money Market was established in 1994. After all that time, he was the only one who had a Sharia compliant instrument, but for this instrument there is no secondary market. Okay, look at this. There are three components in the IIMM. So firstly is Interbank Deposit, Islamic Money Market Instrument, and Islamic Check Clearing System.
I will next my part is 2.0 Importance of Islamic Interbank Money Market. From Abiyatullah Ismat Bacha 2007, how the Islamic Interbank Money Market or IIMM operates is a dual banking system. Issues and challenges by IIMM operating in a system with two banks. Although IIMM trades in Sharia-compliant securities and operates in an interest-free environment, there are likely to be many risks associated with conventional money market, such as interest rate risk. This is very much related to IIMM, using a dual banking system operating, although the conventional and Islamic sector have infrastructure and various differences. This end result seems to be the same. This provides that IIMM rates are comparable to conventional interest rates. Next, from Daud Vikari Abdullah 2010, Global Overview of Liquidity Management is institutions that offer Islamic financial service where the financial crisis and credit problem around the world have prompted a new drive to offer effective, efficient, and Sharia-compliant processes. Because liquidity is reduced by maintaining effective financial stability requires effective liquidity management effective. And from Ashraf Wajidudusuki 2009, Liquidity Management using Commodity Instruments Murabaha is a program launched by BNM or Bank Negara Malaysia to promote the growth of Islamic banking and finance in Malaysia. It facilitates liquidity management and making investments, cash deposit based on a product using the principle of tawarruk.
Okay, so this is the developments of Islamic Interbank Money Market. The establishment of the Islamic IIMM was announced about 10 years after the first Islamic bank in the nation. Bank Islam Malaysia Berhad was found in 1983. The 10 years that has passed had demonstrated the necessities of the money market that adhered to the Sharia. The Government Investment Certificate (GIC) was only tools available to the Islamic banking sectors up until the IIMM formation in January 1994 for managing liquidity, in addition to being the only Sharia compliance instrument available. The instrument had another drawback. There was a second market. Only the central bank BNM was able to conduct business with the five Islamic financial institutions. When they had access liquidity, they would purchase the GICs from BNM, and when they did not, they would sell them to the BNM. This was a poor arrangement for the banking industry, which was rapidly expanding. Hence, the squash because there was no particular prototype. It was obvious to form a Sharia compliance variations of traditional money market when coming up with its own design. As a result, the IIMM was developed utilizing a traditional money market model.
So I will continue this presentation, which is 4.0 types of Islamic Interbank Money Market (IIMM). So on 18 December 1993, BNM issued the guideline on the IIMM to aid in the proper implementation of the money market. To put into another way, IIMM enables the financial institution with a short-term liquidity and fund need to access the excess fund in this market, while those who with the short-term surplus fund invest in this market. So this market is also an important component component in the Malaysia's broader economic management infrastructure, particularly in terms of highlighting the functions of the BNM in monetary policy management. So Malaysia's offer 12 different types of Islamic interbank money market instruments. The types of Islamic interbank money market: A is Mudarabah interbank investment, B is Wadiah acceptance, C is government investment issue, D is Bank Negara Monetary Notes I, E is Islamic accepted bills, F is Islamic negotiable instrument, G is Islamic private debt security, H is Rahnu agreement I is Sukuk Bank Negara Malaysia Ijara, J is sell and buyback agreement, K is Jaga Mas Mudarabah bond, I is when issues. This will be explained
Okay, first type of IIMM is Mudarabah Interbank Investment. Mudarabah investment is a way for Islamic banks with surplus cash to get investment from banks with more needs. This arrangement allows both sides to make a profit. In a 12-month cycle is an overnight investment period, and return should be according to gross margin. The invested capital will be repaid as well as some profits from the use of the funds by the invested bank at the end of the period. Alright, the second type is Wadiah acceptance. Wadiah acceptance may be an exchange between BNM and Islamic managing and account institution. This is a reference to the method by which Islamic banks deposit assets reserved with BNM using the Al-Wadiah principle. In this concept, the borrower is considered the manager of the stores, and the supervisor is obligated to pay the continuation of the account. Okay, the next type is government investment issue. It was presented in July 1983 with the concept of Code Al-Hassan. The Code Al-Hassan concept does not fit into GII as a product that can be exchanged within the auxiliary showcase. This is to equalize the shortage. Then BNM will pave the way for make it simpler for players to purchase and offer paper at the central bank. The cost a player offers or buys is decided by BNM, which keeps up a framework to record all GAI movements.
Is D. Bank Negara Monetary Notes I or BNMNI. The Central Bank of Malaysia has issued by BNMNI, a new Islamic security that replaced the existing Bank Negara Negotiable Notes (BNNN) and follow Islamic criteria that are deemed to be adequate to Sharia criteria. E. Islamic Accepted Bill or IAB. Islamic Endorsement Charge, also known as Interest-Free Endorsement Charge. The reason for pushing IAB is to energize residential and long-distance exchange by advertising Islamic budget items that appeal to Malaysian traders. All Islamic Murabahah norms serve as the basis for IAB. Additional cost and buy adian. Under the IAB facility, there are two different types of financing. First is import and nearby buys, and second is export and nearby deal. And 4F is Islamic Negotiable Instruments or INI. Before INI was introduced, the community used conventional instruments which are negotiable deposit instruments, NID or NID. It creates more deposit instruments just like NID. Therefore, the conventional structure of negotiable instruments requires the establishment of similar instruments based on Sharia principle, resulting in the formation of INI. There are two instruments covered by INI. First is Islamic Negotiable Instruments of Deposit or INID, and second is Negotiable Islamic Debt Certificate, NIDC.
Next, let's talk about Islamic Private Debt Securities. Since 1990, Islamic Private Debt Securities (IPDS) has been introduced in Malaysia. The contract of Baybi Al-Taman Al-Ajil and Al-Murabahah are used to compose Islamic private loans instrument. The Central Banks of Malaysia has the authority to conduct debt securities transactions in Malaysia, whether Islamic or conventional. The bank has the authorities to act as a depository or payment agent, as well as to execute any additional auxiliary or incidental tasks associated with the management of debt securities. So let's talk about Ar-Rahnu Agreement. Looking at the under of the Ar-Rahnu Agreement, Qad al-Hasan is used for an application, which the lender will give the loan to the borrower. Then, as collateral from the loan, the borrower's asset will be used. Therefore, the sales of the securities is entitled to be paid by the lender and use the proceeds to pay off the loan. This can happen due to the borrower's failure to pay the loans on the set period. However, if the collateral has a balance, the remaining money will be returned to the borrower. So, this is Sukuk Bank Negara Malaysia Ijarah (SBNMI). This sukuk is based on the concept of al-ijarah and it is popular in the Middle East where it is popular for the leaseback and the sale application. Furthermore, a special purpose entity that create the sukuk ijarah. From the following transactions, the profit will be used to buy asset. This is for Bank Negara Malaysia asset. Bank Negara Malaysia is used as a place to the lease asset. This is because for the semi-annual rental payment requirement. Also, do not miss out the distribute income. The distributions is returned to investor. Then, BNM Sukuk Berhad will resell the asset when the lease period expired. The sale will be made to the Bank Negara Malaysia according to the set price.
Okay, J is sell and buyback agreement, which is in the short form is SBBA. So SBBA is an Islamic cash showcase swap joined into by two parties in which a vendor offer resources to an SBBA buyer at a cost. And both parties enter into a partition ascension in which the buyer promised to offer back the said resources to the dealer at an agreed upon price. It is designed to increase the liquidity in the IIMM by offering an alternative channel for IIMM participants to obtain their funding requirement. The SBBA mechanism has been approved by Bank Negara's National Sharia Council for Islamic Banking and also Takaful. Okay, K is Cagamas Mudarabah Bond. So on 1st March 1994, the Cagamas Mudarabah Bond was introduced by Cagamas Berhad. This is to finance the purchase of Islamic accommodation obligation. So Islamic housing obligations are from the financial institutions, which provide the open access Islamic housing financing. Okay, as for the last one, I is when issues. So when the issue may exchange the transactions. Obligation securities are issues after the recent purchase of such securities. So WI, when issues, exchange is valid as decided by National Sharia Counseling Committee. This is due to having the ability to demonstrate the reliable level of assurance to proceed with the purchase and the sales transaction.
Okay, we move to difference between my Islamic interbank money market instrument and conventional money market. So, Islamic interbank money market are marketplaces in which Sharia compliant asset with maturities of less than 1 year are exchanged or issued. The Islamic money market serves a similar purpose in that it satisfies the liquidity requirements that Islamic bank have in the short term. It enables Islamic financial institutions to distribute surplus capital on a basis of profit sharing rather than interest. It also needs to be approved by both BNM and approved by the Sharia Committee. Okay, look at the pricing and structure types. To ensure that Islamic instruments are as competitive as possible in the market, indicative pricing for those instruments will be compared to the price of their conventional counterparts. So, Sharia Advisor Council of Bank Negara Malaysia has given its approval to the structures and design of this instrument, based on debit base, asset base, and equity base.
Next is Conventional Interbank Money Market or CIMM. CIMM is conventional money market providing financial service based on riba, gambling, productions or sale of non-halal goods and brokerage, or purchase and sale of assets that are against the Sharia law. This shows that the conventional money market is a profitable investment and there is no sharing of profit and loss. In CIMM, the types of insurance is debt only. For the types of risk in general can be defined as the possibility of something bad to happen or loss, while in investments can be defined as the chance of an investment's outcome to differ from the expected return. There are 4 types of risk involved in the conventional money market, which are liquidity risk, interest rate risk, counterparty risk, and regulatory risk.
Based on the table, we could see that there are multiple differences that could be displayed between the Islamic interbank money market and conventional money market. For the interbank option, IIMM use a Sharia-compliant contract such as Wakalah, Murabah, and Mudarabah, while the conventional money market still use that contract. Next would be the issuance process. The process for IIMM is Sharia-based process that improved by the SAC of the BNM and SCM, while the conventional bank is only regulatory auditory approval. The structure for both banks are worlds apart. IIMM structure is based on the basic of the asset equity and debt. However, conventional banks are purely structured on debt. When we look at the profit, IIMM follows the concept of the profit loss Sharia, in which it would be influenced by the economic policy as well as earning profit from the trade and rent of asset or asset-backed base. CMM, however, is solely on the interest, which is highly volatile considering it is massively influenced by the economic policy. This profit making is forbidden in Islam since it can be fluctuations and influenced by the economic growth, inflation, foreign interest rate, and money supply. The types of investor is which IIMM can be involved with are from the both by whether it's IIMM or CMM, while CMM can only be involved with the CMM investors. Moving on to the types of risk. As you can see here, IIMM have a few numbers of risks in which these risks are not ever as volatile as compared to the CMM ones. The one CMM needs to look out for in the interest rate. Why? Because it is highly rate sensitive. As for the instrument, IIMM have a number of deposit which is Wadi'ah acceptance, card, Mudarabah, Interbank investment account platform, IAP, Wakalah deposit, while CMM only has one which is the Interbank placement deposit. Last but not least would be the money market instruments. As you can see here, there are numerous categorized in different shades. First would be the types of paper in which IIMM use the type of paper. Sukuk Bank Negara Malaysia Ijarah SBNMI, Bank Negara Monetary Notes BNMI, Malaysia Islamic Treasury Bill, while CMM use a Malaysian Treasury Bill MTB, Bank Negara Monetary Notes BNMN. The negotiable Islamic Debt Certificate (NIDC) has a purpose of intermediating sales of the bank's asset and repurchase Islamic negotiable instruments of the deposit, which is the Mudarabah based. CMM, however, only use the commercial paper and certificates of deposit, and this collateralizing lending, where IIMM use a sales and buyback agreement (SBBA). Meanwhile, CMM is still use the conventional purchase agreement. Finally, we have the capital working, which IIMM. As for the instrument, IIMM have a number of deposit, which is Wadi'ah acceptance, card.
So as a conclusion, the establishment of the functional Islamic money market is critical to successful the implementations of an Islamic financial system. So, money market aids to maintain the required liquidity ratio and the statutory reserve. It's also serve as a link between the central bank and the broader banking industry. Malaysia, on the other hand, remained the market's leading country in the practice of Islamic banking. So I think that's all from us. Thank you so much.